So what we're going to talk about now is how during the downward portion of the business cycle, how central banking works, how banking works, or doesn't work. So under the gold standard, you had governments had to balance their budget because they had to exchange paper for gold. Then all that ended when England pulled out of the gold standard to fight World War I, and the same year the U.S. created its central bank. There was two other versions of central banking in the United States that seemed too political, but all that ended with World War I. So now we've been on war finance ever since, because there's no species-backed money. So this is called fractional reserve banking. The way it works in the loanable funds market. Where savers and borrowers exchange time preferences. And here, saver puts $10 in commercial bank A, and commercial bank puts 10% of that on reserve. Fed, central bank, or the Fed in the United States. Then that commercial bank then lends to borrower A, who's the entrepreneur, savings, local funds market, borrowers and savers. Then this borrower puts their money in commercial bank B with 90 cents reserves. And this repeats itself. This is fractional reserve banking. And the idea is that so this is prior to any central bank intervention. You start out with the loanable funds market natural rate of interest. People investing into the stages of production, creating wealth. If you're a Hayekian, business cycles are natural. If you're Keynesian, business cycles are man-made, so therefore we plan to correct the business cycle. So now how does that work? Well, here's the Keynesian equation. Last time we looked at GDP, aggregate supply and aggregate demand. And if the economy is not operating at full employment, however decided by whom, with whatever statistics, then the government needs to spend more, that's fiscal stimulus, or you try to encourage investment, that's monetary stimulus. So the way that works is, here's the central bank, and I should mention that the central bank is not audited. Nobody really knows exactly, and there's movements of people who say we should audit the central bank, especially today, especially with what the central bank does, prints money and buys the reserves of the bank. Then that money then goes to the bank. So the central bank, monetary stimulus during the downward portion of the business cycle, printing money, buying the reserves, banks, and creating investment, artificially lowering the interest rate. We know through Hayek's explanation of the business cycle how that makes business cycles worse. You're artificially distorting people's time preferences. So that's how it works. You simply print money, buy reserves, and then give this commercial bank money, which they're now supposed to lend out at a lower rate of interest. But this doesn't always happen. That's something that's called pushing on a string. You don't have solid investment environment, especially today with everything partially locked down except for state-determined essential services. Things at not full capacity, again, prioritizing public health over economics, unlike Sweden. So you end up pushing on a string. You can have near zero rates of interest, but if people aren't, entrepreneurs don't have anything to invest in because everybody's locked down, or because you're continuing expanding unemployment insurance, or for whatever reason, you have change in the government, have contested elections, people aren't investing, so you can have near zero rates of interest, but that's just pushing on a string because there's no solid investment environment. So then what you have to do, fiscal stimulus. So one intervention leads to another. And we'll look at crowding out. So what's happening today, and the reason I wanted to tape this and what's completely different going on today during the COVID era, I don't let a good crisis go to waste. This is from Political Capitalism by Randall Holcomb, Cambridge University Press, 2018. Stockman argues we have a rigged system, a regime of crony capitalism where the tax code heavily favors debt and capital gains. Banks make a lot of interest, a lot of money selling mortgage-backed bonds to each other, loans for fees, reduced rates of interest, guaranteed deposits, bailouts during the downward portion of the business cycle. The tax code heavily favors debt and capital gains, and the central bank purposely enables rampant speculation, propping up the price of financial assets and battering down the cost of leveraged finance. So I had you look at some monetary theory teaching modules about how expansive monetary policy is regressive because it allows the stock market to go up, reduces the purchasing power of those that can afford the stock market. So all of this cronyism perpetuates the 1% that we discussed. Okay, so what's unique about today is that for the first time in history that I'm aware of, now Congress is using appropriations, in other words, fiscal stimulus, giving money, giving taxpayer money to the central bank. By the way, the central bank is privately owned. Let me look into the history of that. So the first time in history now, Congress is using taxpayer money to give to the central bank. The central bank is using this money to buy municipal bonds, corporate bonds. So those cities, states that can't balance their budgets, souls rule, well, luckily, we have a central bank that can print money. Or we can use taxpayer appropriations to bail out cities that can't balance their budgets. And remember, government labor union employees, like the teachers, like the cities, make almost twice as much as the average American. So using taxpayer money to bail out cities, whose employees make almost twice as much as those who are paying the taxes. And it also goes to corporate bonds. So some companies get their, instead of going bankrupt, the creative destruction process, getting bailouts to certain corporations. That's called corporatism. Of course, we don't know, or it's called political capitalism. Of course, we don't know who the central bank is discounting money to, buying these bonds, printing money, or using appropriations, because the Fed is not audited. So I call that central bank corporatism during COVID. Any comments on that? And it should be noted that this idea behind monetary stimulus is using commercial banks. But in 2008, Team Blue uses the financial crisis to bail out, well, it started with Team Red. Team Red lets Lehman Brothers go bankrupt. They're a big competitor to Goldman Sachs, and the Treasury Secretary at the time, Team Red in 2008, Hank Paulson, who was the head of Goldman Sachs Chinese desk. So they allow Lehman Brothers to go bankrupt, and they bail out the American Insurance Group, because it owed Goldman Sachs a lot of money. During the 2008 turn of Keynesian economics and the start of political capitalism. And then Team Blue gets elected, and they bail out General Motors as a labor union. So none of which are banks. So that's what I call corporate, what I call central bank corporatism during COVID. Monetary cronyism. Yes.
So, wait, what are those what is that taxpayer money going to?
Federal appropriations now, for the first time in history.
Is that the whole country's?
Yeah, when you pay taxes.
I didn't know if it was like certain states.
Congress, this is the USA Congress. Congress that the anti-federalists warned us about, put on trade barrier protection against the northern manufacturers under the Constitution, while giving 1.6 votes to slaveholders in the South. That's Congress. Income tax. Income tax goes to the central bank. The central bank then bails out certain cities and certain corporations, giving them low natural rates of interest access to money. Does that answer your question?
Yeah.
Anyone else have a question on central bank corporatism? Or you can just call it financial corporatism.
What was the money that Lehman Brothers invested in, which originally made them have to go bankrupt? Was it like real estate?
Oh, I'm not exactly sure. Probably because that was the real estate boom and bust.
Yeah.
Based on
It was like commercial real estate, wasn't it?
yeah, based on poorly rated bonds, which we studied. Regulatory capture.
My dad worked.
Uh-huh. Yeah, a lot of this in New York City, a lot of people in finance. This is how finance works. Starting with the central bank in 1914. Politicization of the economy, instead of Cadillac voluntary exchange, you get more and more political power, more and more decision. How about overseas? Any questions on that?